Hi, please pause this video and go through this risk disclaimer. So welcome to this new video and today I thought of explaining a new advanced concept called traps in our demand supply price action trading method. So in today's video I'm going to explain what are price traps and how traps are laid by institutions in order to grab liquidity from the retail side of the market. So this comes from the further analysis of the HDFC asset management company's price chart analysis that we did in the last video. So if you have watched the last video where we discussed this particular stock, we had marked the zones on the daily chart, what you are seeing right now on the screen. And you can see what happened since the past couple of days, since last we discussed this particular stock, and how a beautiful trap zone had played out in this particular stock. So let me first take you to the post which I wrote today afternoon while replying to one of the learners with the ID Vivek Trader. So Vivek asked this question that HDFC AMC giving a bounce after breaking erstwhile demand zone. From demand and supply perspective, how is it likely to move? So this was a question that Vivek had posted on the forum, and it's a very important and a valid question, and I thank Vivek for bringing up this question. Thank you, Vivek. So let me go through the detailed answer that I gave regarding this question, because not only it pertains to this particular stock, that is HDFC AMC, but it also brings out an important concept of traps that are often laid down by institutions for their own benefit. And so let me just take you through the post. So there's no need to reinvent the wheel. I've already written in detail and explained what has happened in this particular stock and how the concept of trap has played out. So with the example of HDFC AMC, which played out today in the last couple of few days, let me explain the concept. So first, this is also a continuation to the analysis of HDFC AMC that I had done in my last video. So it's a two-way objective that is being met with this particular video. So right now we can see that as Vivek rightly pointed out, that the stock has broken the first. These two are basically daily demands as well as weekly demands, which are sort of nested within each other. So it has broken the first weekly demand. So last time I think price was somewhere around here, right? And we can see that it has broken this demand, and before touching the the next demand, somewhere from the middle it has bounced off, and now it is going in the expected direction, that is upwards. So why did this happen? From where it does happen? We're going to analyze that. So I said, so he asked, where is it heading next? So of course I said it's heading towards this particular supply zone on its path next, right? So from the weekly perspective, sorry, just a minute, I think. Yeah, so let's see what has transpired since the last time we took stock of HDFC AMC. So the first demand zone has been violated, but the second one hasn't been touched yet, but price is moving up. Yes, you can see that. When this kind of price action takes place, one must look at LTFs to see if any trap was laid that we had overlooked. right? So we must look at that. But since this is a post analysis, therefore we are seeing what was there. But once you advance, these concepts must be kept in your mind while analyzing the stock itself. So therefore, when you see this kind of zones, it's always a good practice to come down to a lower time frame and see for any traps below. So for that, I have to explain what are traps first, right? So let me first go through this discussion, then I'll explain the concept along with it, right? So yeah. Next, let's look at the daily chart. Since it's the daily chart itself, it's a very similar picture. The daily demand zone also has been violated, which was itself the weekly demand zone, and a similar kind of picture. One more thing is that till our last analysis, price was somewhere around here. So therefore, this demand zone till that time was not violated, right? So therefore, the importance of this particular supply zone wasn't much. So once a supply zone is able to break an opposing demand zone, we would give some sort of importance to that demand zone. Otherwise, we don't give too much of importance to every demand zone that is, or supply zone that is formed, right? So once this demand has been broken, so we can see that there was a lot of power of the sellers that was displayed on its because of this price action, and this particular supply had now assumed importance, right? This is also what I explained over here. Now, as I said that, let's take a look at what happened in the lower time frame. So we go down to the 15-minute time frame, right? So this is the 15-minute chart. So this LTF shows the trap that was laid, right? Right now you can't see the trap because I haven't shown the price action that happened on the 15-minute while this demand zone was getting formed, right? So, but one aspect that I explained over here is that even if there wasn't a trap, remember we have learned the concept of confirmation price action trading. There's a video on confirmation that you must watch, in which I explained one of the style of confirmation which actually applies in this particular case. So let me revisit that entire concept over here for traders who are actually new to this concept. Even they will benefit from this particular video, right? So once you have marked your demand zone, you watch for price to arrive at the demand zone, right? So here you watched that price entered over here, okay? Then again it went on inside the demand zone. It penetrated the demand zone further and further, right? And in the process creating fresh drop-based drop supply zone, first one here, right? Even if you consider this as a supply zone, drop-based drop, price went up, tested over here, and then again dropped, right? And again another drop-based drop here, another drop base, then again price went back in, tested the supply, and again fell from there. So what you can see from this kind of price action is that supply zones in this LTF is getting created inside this daily weekly demand zone, and it is getting respected, and it's working fine as well. So this kind of price behavior or price action tells you that the seller is, or the institutions which are selling, is very much in control, right? And there is hardly any kind of fight back from the buyer institution, which should have or could have started buying inside this demand zone, right? So in this case, you see absolutely lack of interest from the buyer. It's not even trying to fight back, right? And till here, this was almost, it was about to sort of engulf or eliminate this demand zone. It showed little bit of reaction from here, while it had penetrated almost 85 to 90% of the demand zone, right? So price reversed little bit from here, right? Started compressing on the way up, And the first supply zone which it met over here was this one, right? Although this was tested, this was compressed. And if you combine this together, so right, so it went into this the first supply zone that it encountered and then started dropping from there itself. So you can see that this again, this kind of price action itself tells you that the supply is still under control. The selling institution is still under control. And these many demand zones, which are not that great, that were formed, were quickly broken. Right? Look at this. Supply zone getting respected, demand zone getting eliminated. Although they were very bad demand zones, still they got eliminated on the way down. So all this weight, again, based on supply zones getting created, no demand zone. So supply is in control throughout this entire path as it started penetrating this demand zone. So this is a clear-cut case where there was no confirmation that the buyers would step in and start buying the order flow at all. There was no such sort of evidence at all to suggest that. On the other hand, it did give you evidence that supply is still under control, or supply is still pushing against the buyers, and there's hardly any buying interest. It is only price once broke this decisive candle, it broke this entire weekly daily demand zone. Price came down till here and something happened here. Something must have happened here because of which price took a jolt on the upside and started going up. So something over here must have been there, right? So ideally So something must have happened over here because of which price started its upward journey and the buyers started buying from here, in this portion, right? And while analyzing the chart itself, you should always take a look at if there is some kind of trap laid down below any important zone, like a daily zone, weekly zone, monthly zone. And we should always be careful when such zones appear on the charts because potentially they could be traps laid as such. So here comes the concept of traps now, right? So this is what I explained over here. So now let us see why price reversed from below the daily weekly demand zone after breaking it. It was due to a trap zone laid below the daily weekly demand zone where stop losses are supposed to be placed by traders who are going long at this daily weekly demand zone. Okay, let me just read it completely and then let me explain it. Institutions just love it because they get a host of sell orders, that is sell stop loss orders to get their own buy orders filled against them. Such zones become high liquidity areas which they love. Retail traders who get stopped out and then see the price move up in the desired direction curse their luck, but unfortunately the market often works this way. This has nothing to do with luck. Right? So let me explain what happened over here, and this is the concept of trap as well. So going back, so here you see that this is the daily chart. Now if I move to the 15-minute chart, so this is what happened, right? It moved up from here. Now, if I just reduce and see what happened back then, say jump from here. So let us take a look that when this demand zone was formed, what was there below this demand zone at this area? Let's see the price action that took place there. Right. So can you see clearly what has happened over here? So price started moving up from the first demand zone. This was the first demand zone, daily weekly demand zone. It created this rally based rally over here, right? Price came down, slightly tested it as a feather touch over here. Then again, it started creating rally-based rallies, demand zones. Sorry, drop-based rally demand zones, and demand zone here, and then it moved up, right? So this is basically a chain of demand zones which are touched, which we know are called as compression zones. So these zones together form a compression. And where did the compression start from? The compression started from this particular zone. So this was the first zone in the compression, which is supposed to be called the root of compression. I'm not sure if I covered this concept, but I'm sure I've spoken about it in many posts. So this is the root of compression. I understand even this concept of what is the root of compressions. So root of compression is the first zone wherein the compression series had started, right? And that is the zone which could have most pending orders, the first one and the last one. This is called the end of compression zone, and this is called the root of compression zone, right? Sorry, I think I moved the zone itself like this. See how in this case, even in the LTF, this was the end of compression. So start of compression, root, testing, going back, testing again, then break away from the compression, forming this root. See how nicely even the end of compression also had worked nicely in this case. So price had dropped in a very ugly, again a compressed manner, in a superb linear compression manner. It had dropped to this particular zone, which was the breakaway of the compression, or the end of compression zone, right? And then price had reacted nicely from that zone, from this particular demand zone, right? So now this time what happened is that right below this weekly demand zone or daily demand zone, we had these two zones stacked together, this one zone and this particular zone, right? So since these are also our stacked compressed zones, the furthest zone would be this one. Let me color it with a different color just for visual. Let me color it blue. See, this was the zone, right? And let's see what happened. Can you see exactly from this particular zone, price had started moving up, and this is from where they had unleashed, the buying institutions had unleashed their buy orders. So this also explains why there was a lack of buying interest, or why the buying institutions were not interested in buying in this particular zone, because they wanted price to break this demand zone, come over here in this trap zone, and then from here they wanted to buy. Two reasons for this. One is that they would get the lowest, cheapest prices for this demand zone. Second is that this particular trap zone lies exactly below this daily, weekly demand zone. So traders who are going to trade these daily, weekly demand zones directly as a touch trade, they will always enter somewhere above at the beginning of the zone or somewhere inside the zone, depending upon which style of zone marking you have, right? And then they will always keep their stop losses, their sell stop losses, remember, slightly below the end of the zone, somewhere around here. So what benefit the institutions get is that the retail traders who are buying over here, they will start keeping their sell stop loss orders somewhere around here. So therefore, this will become a cluster of, this will have a cluster of sell stop loss orders against which the institutions can fill their buy orders. So they have a double benefit doing this. One, get more of your orders filled against the stop loss orders. Two, get the best, lowest, cheapest price for their buy orders. And third, if you consider that they have actually knocked out or kicked out many buying retail traders by eating the stop losses, and they have like sort of moved them away from their path, and they alone have reaped the benefit of the movement in the upward direction from here by buying at the lowest price, getting most of their buy orders filled against a cluster of stop loss orders of the retailers, and third, in the process, chucking out a lot of retail buyers who had bought before, expecting this demand zone. But as a prudent demand supply trader, if you have been following this English channel of Alpha Trader at least, you would have watched at least the confirmation part, that there was no confirmation, right? I mean, if you're an aggressive trader, of course, you would have bought over here in a touch trade, trading this daily weekly demand zone. In that case, you might have got stop loss, or even if you are a more conservative trader, seeing that two demand zones are near each other, you might have bought half quantity here, half quantity you would have bought over here, and then you would have kept your stop loss below these two zones. So you would have used the concept of stacked zones that are very close to each other, which was taught, I think, in video number 7 in the basic building block series, right? How to place stop losses in stacked zones. So if you had followed that kind of concept also, you wouldn't have been stopped out, right? And you would have got the fill of your first part of the trade. You might just be breaking in right now. Sorry, breaking even right now, because prices at your entry price somewhere near that, right? But if you have been aggressive, bought here, stop loss here, you would have been stopped out, and because of this trap that was laid. So again, to summarize, what are traps? What are this kind of traps? So traps are often zones that are laid out below your higher time frame zones inside a lower time frame zone. So if I just confused you with this statement, let me just clarify it. So basically, in the example, this is a daily weekly demand zone. This is the higher time frame demand zone. Now, trap zone, it has been laid, that is, a demand zone has been placed right below this HTF demand zone at a LTF demand zone. So here LTF is the 15-minute time frame, which is the present one. So this is a lower time frame demand zone which has been placed, directly below this higher time frame daily weekly demand zone. So this becomes a trap zone. So always remember to take a look at the lower time frames. Look at the 15-minute, the 30-minute, the 1 hour for any kind of trap zones and any kind of good quality demand zones that are placed right below. Because often, if that is the case, you can become ultra conservative and not even trade this particular demand zone. You can directly place your entry over here and stop losses. Possibly, if I were to trade this trap zone, I wouldn't even have kept the stop loss over here. I would have kept the stop loss right below this lower demand zone, right? And trade this. And if you're hell-bent on just trading this 15-minute time frame into a lower stop loss, then entry over here, stop loss below over here, and then target as per your rules of trade plan, where you want to keep your targets 2-1, 3-1 RR, or even higher, or opposing zones, whichever the case may be. So that is how these traps are basically to be looked at and handled. So this was a good example, I thought, and you must always be cognizant of such traps, right? And exercise caution in such examples, and always look for confirmation, especially in these kind of tricky zones or tricky areas wherein traps have been laid. So even if you are not aware of the trap laid, if you have been watching the previous videos, if you would have watched or learned the confirmation style video, then there was pretty much no confirmation over here at all. There was no buying interest at all over here within this zone. There were just sellers in control, right? And So buyers were waiting here to buy over in this trap zone, and they were basically fed with stop loss orders over here as a plus pointer to them. And see now what they have done. So they have pushed the price above, right? And then this move has played out, right? So this is the concept of price traps. And this is also the follow-up on this HFC AMC analysis. So now let's see. So expectation is that right now the price will head towards the supply zone, right? And the only concern over here is this particular supply zone, which is an advanced concept again. There is one supply zone over here. This is a broken zone, of course, and broken zones are only to be dealt by advanced traders. Just trying to explain this. See, there is a supply zone over here, worked previously, and now it has been broken. It was broken here, right? So often these broken zones can also act as a supply. Behind this particular concept, why I am saying that this price could react from here as well, I cannot go into details right now because this is definitely an advanced concept. Wherein in the daily chart itself, the hints were there as to why that this could also be a potential turning point. So there is something, some price action that has happened while prices fell over here that is sort of, you know, prompting me to say this, that something could happen over here. Like prices can even fall from here, and mostly the demand supply traders who are just trading the basic demand supply concept as propagated by most demand supply trainers or institutes, they don't teach this kind of advanced concept. So I think therefore this is not in the public domain as such, but I mean, people who have been following this price action for years, they might be aware of it, or they might have experienced this kind of move, and there's a particular reason why this is important, right? And why this is not important, supply zone. So why this is important, I can't explain this in this particular video. It's a really advanced topic which hopefully I am able to cover in much later videos, but for now just ignore this if you will. So let's watch out for this particular supply zone. And by the way, this is not a QM zone. So if some of you are thinking that this is a QM zone, it's not a QM zone. QM zone is here, right? It's not a QM zone here. This is something else that is here. And as time permits, you know, I will share this concept as well. But this has been a very, very confidential topic as such. But anyhow, for those who are worthy of receiving this knowledge, they will surely receive this knowledge, but hopefully sometime in the future toward the recipients. So let's see what happens from here. And let's see what happens over here. Right, so that's it for now. Thank you so much for watching. Hopefully the concept of traps has been explained well, hopefully over here, right?